I want you to understand these words when I say them is that when you look at price action, you should look at it like a field, a row of mountains that you're trying to read and understand where to navigate the terrain and understand where liquidity is. If you don't understand where liquidity is, you're not making money. So price action that I'm gonna refer to today is Wednesday 23rd, and I'm showing you this small portion of price action here that we've seen trade higher up into these buy sides here, and hopefully we run above or gap above these areas here, and then we'll see what we're looking for. But I'm gonna add a couple things on my screen, and actually I'll do that when I drop down. So we have long-term sell side here, okay? We went above these daily lows, long-term sell side, and after we do this on the 22nd right here, after being delivered, I'm expecting price to no longer trade lower than this. Why? I have relative equal highs above here. It ran daily buy side above here, swing high, and then it traded off, leaving relative equal highs above there, and then it left midterm New York buy side right there as well. Sorry if you hear the goddamn mowers or whatever it is they cutting the grass, but when it drops below here on the long-term sell side, I'm no longer using the idea that price should trade lower. It should start engaging buy side liquidity. Trades to the consequent encroachment here, rallies, opens up on Asia session 6 p.m. trades higher, leaves London buy side here. At 9:30, we gap, not even gap, my bad. We rally higher, above pre-market highs a little bit, but at 9:15 we still leave relative equal highs above pre-market. So 9:30 drops, delivers lower, and we have a premium opening range gap, which, hopefully you understand those things already in price to be true. What we see is a 9:30 drop. When price drops here at 9:30, without taking out these pre-market highs, I'm understanding that I want to use this as a factor to factor in these relative equal highs for London and factoring in the pre-market highs. When it does that and it shoots down like this, and we have a premium opening range gap, we're expecting it to feel bearish first. When it does that, it trades lower. News comes out at 10 o'clock. Bam. 1 minute trades, rejects here, rallies, rejects here, rallies, and then we have a displacement 10-12 going 2 minutes after the macro. It displaces here, and then it rallies higher here. Market structure shift. This would be your silver bullet for today, understanding that you could have bought on this premise anywhere in this fair value gaps. If you understand where to buy high and low, you could have used any of these fair value gaps to do it, and I'm going to add on these inefficiencies to show you where I was getting my entry at. July 22nd, 9:52 a.m. Sibby. If you measure July 22nd, which this is a study moment for you, you can measure July 22nd New York range, and this is a discount array all the way at the bottom where an entry, I'm pretty sure entry was, I have to check again, I don't remember, but 9:52 a.m. Sibby is a discount array here. What does it do at 10 o'clock? It runs low, feels it all the way, trades back above, trading back above it. Then it rallies lower, respecting consequent encroachment. I bought at 10:13, I believe, and a 15-second inefficiency, which is these two black lines here. I didn't wait, so if you're wanting to get the best feel or whatever it is, you can just buy that first 15-second inefficiency when you're expecting price to do what it's supposed to do when it's supposed to do it at the time that it's supposed to do it. So buying here, expecting price to rally above to London buy side was my first partials above there, drops lower here. If you miss the trade at 10 o'clock, you could have waited for PM buy side. I understand where I want to see price go to. I want to see it go to midterm New York right here, okay? So I'm finna show you, and I'm gonna detail it out to you, that if you did miss the rally up at 10 o'clock, you could have waited for 1:30 session. 1:30 trades lower at 12. leaving all this liquidity that we don't even care about. It doesn't make a difference. It trades down to the low of here. If you look at inefficiencies during July 22nd, you can see that this trades consequent encroachment down here, study moment. Trades higher from the opening range gap low. And then at 1:30, we're here. First presented fair value gap is here, which is the first presented fair value gap after 1:30. Not a minute before it. It has to be 1:31 or higher. This inefficiency comes in at 1:34, I believe, or 1:33. It trades to a 15-minute sell stop rate, which was below here. Hits consequent encroachment of the opening range gap. And if you go to your 15-second chart, which I don't have to drop down there to show you that, but I'm actually going to do that, just so you can fully understand why I'm looking at price to do what it's doing. 15-second inefficiency here. Trade back over to my 1 minute. Drops lower here. Raids 15-minute sell stops. Trades higher. 15-second inefficiency here. What does it do? It trades higher. I'm not buying it at 159. I'm seeing it trade higher here. Creates the market structure shift. Breaks these lows. Creates a market structure shift to the high side. And then 203 is the best entry there. I'd be lying if I bought at 203. I had to see a little bit of it going up, which isn't what you're supposed to do. You should be buying it when it's on a down close candle. So either way, I got my entry a little late up in here. It was right around probably like 207, 209. I don't really know. I'll put the little screenshot on the thing. And then it rallies above buy side here, 11:55 a.m. And if you hold, you can see it trades all the way to midterm buy side at 402. Wish I would have caught it going a little bit higher, but not for me right now. I couldn't trade past 4 p.m. So navigating the terrain, understanding where price is going to do it, when it's going to do it, and how it's going to do it. I can't stress enough that you really need to focus on price. Focus on why and where you're negating that you don't want to see this go any lower. And if it does that, then you have to be the trader to use your eyes and say, hey, I need to switch something. Either way, I hope you found value in this video. If you can like it, subscribe, doesn't make a difference. I appreciate the one person that's viewing anyway, doesn't make a difference.